Welcome back, everyone. In this video, we're diving into vendor transactions in Chapter 6 in QuickBooks Online. When a business works with vendors, it doesn't just mean writing a check or paying an expense. There are several different types of transactions that we can record in QBO, each with its own purpose. And as you might remember, if you mouse over create, that's where you're going to create most transactions in the system. And we have this column here for vendors. So the expense entry screen, this is where you pay right away at the time you purchase something. For example, if the company paid $200 for job supplies and swipes the company credit card, that's an expense. Behind the scene, QBO debits the expense account, or if you bought an asset, that could be debited as well, and credits either the balance of the checking account or the balance of the credit card, depending on how you paid. The check entry screen is used when you are either using a physical check to make a payment for something, or if you're using your debit card. So for example, if Mookie the Beagle goes to the store and buys some office supplies and they use their debit card, the check screen is going to be used to show the decrease in the balance of the checking account. Similarly, if they paid for those items using a check, a paper check, the same thing would happen. We use the check entry screen and the balance of the checking account would be decreased. The offset, the other account involved in the transaction, depends on what it is that we're purchasing. The bill screen is used when we've received the service or we've received an asset or a product from our vendor, but we haven't paid for it yet. This will always involve an increase to your accounts payable account. Anytime you use the bill entry screen, you're going to credit or increase the accounts payable account. So for example, if Mookie the Beagle rents equipment for $840, that would involve an increase or debit to an expense account as well as an increase or credit to your accounts payable account. The pay bills screen is used once it's time to pay that vendor. So in order to use the pay bill screen, you would have had to have first used the bill screen and recorded the increase to the account payable. Then you would use the pay bills screen to decrease the accounts payable. And you're also going to either decrease your checking account or you could increase the balance of your credit card account depending on how you paid that bill. The purchase order screen is non-posting, meaning that it doesn't affect our account balances yet. So for example, if Mookie orders a dog hammock from a supplier, it's just a promise. We don't debit or credit anything until the goods are received from that vendor. And then that purchase order would become a bill and the account payable would go up then, but not until those goods are received. The vendor credit screen is used if a vendor refunds or reduces what we owe. So for example, if a supplier gave us a $40 credit for an overcharge, QBO is going to decrease the accounts payable and then decrease either the expense account or the balance of the asset account, whatever it is that the overcharge related to. And then the credit card credit screen is used sort of similar situation, but applied to a credit card. So if a vendor issues a refund back to the credit card, QBO is going to reduce the balance of the Visa credit card payable account through the credit card credit screen. And lastly, even though it's not under the vendor column, we'll also be using the pay down credit card screen, which the name does a pretty good job of describing. The pay down credit card screen is used when you're making a payment on your credit card. So that's going to decrease or debit the balance of your credit card payable account and then going to decrease the balance of the asset that you used to pay for it, or if you used another credit card and just transferred the balance, it would increase the balance of that other credit card. I realize that's quite a bit of information to take in at once. We'll be going through most, if not all, of these screens in detail within this chapter. Now, before we dive into recording transactions, though, we're going to take a look at the vendor list. And to get to that, you mouse over My Apps and then go to Expenses and Bills, and then you should be able to select Vendors. All right, so now we're seeing the vendors that are already in our system, and it looks like none of them have open balances because I don't think we've recorded any bill transactions yet. So the vendor list is a big time saver, just like the customer list, because once vendor information is stored in the system, you don't have to retype those details each time you use one of these vendor transaction screens. You just select the vendor, and QuickBooks will fill in the rest. This makes the process faster, easier, and more accurate. And the first thing that we're going to do today that's going to change your company file is we are going to add a new vendor. So in the top right, we've got this new vendor button. I'm going to click that. Now, just like we could import customer lists, you can also import vendor lists. I'm not going to have you practicing that today though. So we're just going to manually enter this vendor for now. And I think there may be some other vendors that we add later. And I know that there will be some edits that we make because we haven't added contact information to all these vendors yet. So for right now, just hitting new vendor and then typing in the details. And this one is going to be called Joseph Leasing. We're going to put in their phone number and their address and their payment terms as well. So I've entered all those details for Joseph Leasing here, phone number, address, and then payment terms. As you can see, there are other fields that we could possibly put information in for. We could put in the tax ID number for tracking payments for 1099. For example, we could also indicate which expense account should typically be associated with this vendor. That would help us when we record transactions related to that vendor and would pre-fill that information. But that only probably makes sense if you're consistently using the same expense account, but a lot of times you are, so that might be helpful. But the text doesn't have us do that for Joseph Leasing, so I'm going to ignore it for now and save. So that's one way to add new vendors, going back to this vendor list. You got this button for new vendors. You can also do it from transaction entry screens involving the vendors. So if I pull up any of these screens, like for example expense, and the vendor's not in the system, if I click this drop down for payee, I can add new, and it gets me to a vendor entry screen there as well. But I'm not recording an expense transaction right now. I will be in just a moment, but I'm going to close this out, and I'm going to go back to my home page for my company. And one way to do that, I don't know if I mentioned this in any of my previous videos, but if you just click this Intuit QuickBooks logo in the top left, it brings you back to your home page. Alright, so the first transaction that we're recording is in fact an expense. I could have just stayed on that screen, I suppose. I'm going to mouse over create in the vendor column, look for expense, and let's see. We are going to be dealing with Bishot Supplies, so from the payee drop down, they're already in the system. And let's see what the details are. Okay, so we are recording a transaction through the expense entry screen, which means that we are paying for something, either using our checking balance or our credit card or some other form of payment, but we're paying for it today. And in this case, it says we're using the credit card. So we're going to keep it at the Visa credit card here for the payment account. The date of the transaction is January 23rd. And the payment method we just specified was credit card. Don't have a reference number. So down here in the category area, this is where we're going to indicate which other account besides the payment account is going to be involved in the journal entry behind this screen. And let's click on the drop down here. We see a bunch of our expense accounts. It's not necessarily an expense account. Typically it is, or it could be an asset account if we're buying like equipment or something like that. But in this case, let's see, what are we looking at here? We are going to add a new account. So we're going to select add new, and it looks like we're buying some job supplies. So that's the name they told us to use, job supplies. And the account number is 5021. The account type is going to fall under cost of goods sold. And then the detail type is supplies and materials cost of goods sold. And that's all the detail we need to enter. So we're going to save the account to the system, and then the account shows up here in the category line. And then they gave us a little description. It says supplies for Bella, and then the amount is $200 even. And it does say in the text that These supplies, since they're specifically for Bella, are going to be billed to the customer. So we're going to check the box for billable. And because we did that, now we need to indicate which customer and project they should be billed to. And this is going to be billed for Bella. So that's Carlos Hafra's pet. I'm going to select Bella there. And I don't think we actually invoice Carlos Haffer for this transaction until a later chapter. So we'll have to remember this transaction later on when it comes up. And that's all the detail we have here. Other than they do ask us to enter a memo. It seems redundant, though it's the same as the description, but we'll do it. If we had any images or PDFs, we could attach them here, but we don't. So now we are going to save this transaction. And once we do that, we can always click the More button, we pull up the transaction journal, and we can see the behind the scenes journal entry here. So we indicated that it should be charged to that supplies expense. So we're going to see an increase to that account. Expenses increase on the debit side, and it said that we had paid for this expense using our credit card. This is a liability account, so we're increasing our liability to show that we owe more. We increase liabilities on the credit side. So the journal entry looks good, and we can move on. So the next transaction that we are going to record is going to be a check transaction. So we're going to mouse over create. In the vendor column, we find check. And the check screen is used anytime our payment is made by check at the time that we make the purchase. And in this case, the payee is going to be one of our vendors. It's going to be Carroll Media Design. Normally when you select a vendor here, the mailing address populates, but when we entered most of these vendors previously, we didn't put in addresses, so nothing's showing up other than the name here. And we are writing a check from our checking account, so make sure checking account selected there. The date of the payment is the 23rd of January. That's good. The check number autofills. We wrote a couple other checks earlier in the class. And now we're going to indicate which account should be charged for this check. And it looks like we are paying for some advertising and marketing. So we've got an expense account, 5001 advertising marketing. There it is. A description, we have social media design, and the amount is $540. It's not billable to a specific customer, so we're not going to check that. And then they're going to have us type in a redundant memo. And we can save the transaction, hit the More button, take a look at the transaction journal. Since we wrote a check, we know that our checking account balance is going to decrease. So we should see a credit to the balance of our checking account here. That's an asset, so credits decrease it. And then what we were paying for was advertising and marketing, so our expense is increasing on the debit side. And our next transaction is actually part of a typical workflow. We are going to be entering a bill first. That's going to be our first transaction, and then we're going to pay that bill. So mouse over create, look in the vendor column. We got a typical workflow here. First we enter bills, which increase our accounts payable, and then later on we pay the bills, which decreases our accounts payable. This is the typical workflow for expenses where we're not paying for the expense right away, but we're entering that we owe, and then we're paying it later on. Now, if we're dealing with inventory, typically inventory has 3 steps. Usually there's a purchase order step that is non-posting, doesn't create an account payable because you just ordered the stuff, but you haven't been billed yet because you haven't received it, hasn't shipped. Later on, when the goods ship, that purchase order is recorded as a bill. So we go to that screen and transfer the information for the purchase order into that bill to indicate if we received all the quantity that we had ordered. We can reduce quantities if needed, and then finally we'd pay bill. So sometimes we go in that order: purchase order, bill, pay bill. That's in case of inventory items and that or tangible goods. If it's services and we're not paying for them on that day, we'll record a bill to show an increase to our account payable, and then we'll record a pay bill to decrease the account payable later on. So for right now, we're going to record a bill. So I'm going to select that. And this bill is to the vendor Joseph Leasing. And we did enter the address there so we can see it populated as well as the terms. And the date of the bill is the 23rd of January, so that's already set. The due date is correct in that it's 15 days after the bill date because of those terms. The bill number we're going to leave blank. For the category, we're going to indicate what this bill is for. And it looks like we're renting space, or no, we're renting equipment from Joseph Leasing. So we're going to indicate 5,028 rent and lease expense. We've got a little description here. The amount was $840. It's not billable to a specific customer, so leaving that unchecked. And then if we wanted, we could enter a memo. If we didn't describe it well enough here, we could provide more context. What did we rent exactly? I would like to see some kind of attachment if we had it. If there was an actual bill received from the vendor, we could take an image of it or upload the PDF here. But we don't have that, so we're not going to do it, and we're just going to save. Now we are going to take a look at the journal entry by hitting the More button, going to Transaction Journal. Because we're on that bill entry screen, we know that we're going to see an increase to our accounts payable. Every single time you use that screen, you will see that. And that's what we see, a credit to our accounts payable. That's a liability, so that's an increase. And the debit indicates, why do we owe money? Well, we are renting stuff, so we charged an expense. We increased our expense through that debit. All right, so now that we've entered this bill, the next thing we're going to do is record paying for it. So mouse over Create, go to Pay Bills. You have to have entered a bill in order to be able to use the Pay Bills screen. And the first thing we do here is we indicate how are we paying for this bill. The text tells us we're using our checking account to pay for it. We have to enter the payment date, so it was January 24th. And the check number auto fills there. And let's take a look. Okay, so now we have the bill that we recorded previously. Now it shows overdue because it's using the system clock, which is in August of 2025. So it looks like it's past due, but it's really not, because we're pretending like it's in January still. So I'm going to check this box to show I'm paying that bill. And if I was not paying it in full, I can change the amount here, but I'm not going to change the amount here. So I'm just going to save the transaction. Now notice the default is schedule payment. That's a relatively new feature in QuickBooks to be able to do that, but right now we're going to click on the drop down and we're going to save the transaction. And now the pay bills screen shows that there are no bills to pay. It's paid, so it's not showing up here. Now if I close this window out, come up here to the search, give it a second, and I'm going to see that bill that we entered as well as that bill payment that we just entered. I'm going to select the bill payment. And now I can click the More button at the bottom of the page. I can pull up the transaction journal, and in a moment we're going to see that journal entry. And we know that in a pay bill screen, we're always going to be decreasing our accounts payable, and we see that here. And we see the debit, and a debit to a liability is a decrease. We owe less money because we paid the bill, and we're showing here with the credit how we paid for it. We are crediting the checking account. This is an asset account, so that's a decrease in our checking. We have less money in our checking because we use the funds to pay off our debt to our vendor. In section 6.9 in the textbook, they go through some accounting essentials, talk about some terminology, what is accounts payable and so on, what is a 1099 and so on. Read through that. I'll just briefly mention a Form 1099 is an IRS form that must be completed for businesses to which we paid $600 or more for services in a year. It's more complicated than that, though. It's just from the text. And they link to the IRS website. Just you need to know a little bit about it, and if you paid $600 or more for services in a year, and you paid in the form of like cash or check or barter, then you're likely going to be responsible for filing a 1099. If you paid for services and use your credit card, the person that you paid, the vendor you paid, is going to get a 1099-K from the credit card company, so then you wouldn't be responsible. But all those details are a little bit beyond the scope of the class. This isn't a tax law class, so just read through that section if you're interested. Check out the IRS link, and you might look at when is a 1099 required and when is it not. All right, moving on. So now I'm into the part of the textbook that's labeled Mookie Exercises 6. And it looks like here we are going to start off by updating some vendor information. So I'm going to get to the vendors area of QuickBooks. So mouse over my apps, under expenses and bills, got the vendor center here. And we are going to be editing the details for Bishat supplies. We're going to put in some contact info, I believe. All right, so now on the page for Bishat supplies, I'm going to hit edit. And now I can enter those details. Looks like we've got a phone number and an address to put in. So now I've got those details entered. I'm going to save this vendor record. And now we're going to record an expense transaction with this vendor. So mouse over create. On the vendor column, select expense. From the payee, we find Bishat supplies. And the payment method that we're using is the Visa credit card. The date of the payment is the 23rd of January. The payment method is credit card. We don't have a reference number. Down here with the category, we're going to indicate what we're paying for. This is showing how we paid. Now we're indicating what did we buy. And it says that we are buying 5,024 office expenses. We don't have a memo of what those expenses were, so I'm not going to put anything here for description or memo. The amount is $440 even, and this is not billable to a specific customer, so we leave that unchecked. And then we are going to save this transaction. And if we wanted to, we can look at the journal entry, but we've looked at a lot of these. I can tell you right now that we are going to be crediting our Visa credit card payable because we owe more money because that's how we paid for this, and we're going to be debiting our expense account as well. So now that I've saved the transaction, I'm just going to close it out and move on. So the next transaction has a little context that I should read. It says Bishat Supplies mistakenly overcharged us $40 on that previous transaction, and we are going to be recording a credit card credit because if you remember that last transaction, we used the credit card, we got overcharged, so now we need to reduce the balance of that credit card. So to do that, we're going to mouse over create. In the vendor column, we've got credit card credit. We indicate that there. For the payee, we're going to select Bishat Supplies. This is going back against the balance of the Visa credit card, so we make sure we select that. The payment date is the 24th. We do not have a reference number. We're going to enter an account here for the category. If you remember from our previous transaction, that was recorded to the office expense account. Now we're reducing the balance of office expense because too much was placed into that expense account earlier. We're going to write a little description here about what happened. So refund for overcharge. The amount of the overcharge was $40, and I am going to save the transaction. I'm going to hit the More button, pull up the transaction journal. And if you think about what happens here is that we owe less to our credit card company, so we need to have a decrease to that liability. And that's what we see here. A debit to a liability is a decrease. We're decreasing the balance of the Visa credit card account. And then also we're seeing a decrease to the balance of our office expense account. A credit to an expense account is a decrease. The expense is being decreased because too much was placed into that expense account originally. All right, our next task is going to be recording a transaction with Hafra Cyber. But before we do that, we're going to update the vendor information for Hafra Cyber. So to do that, I'm going to mouse over my apps, go into expenses and bills, find the vendors list here, and find Hafra Cyber, select them, click on the edit button up top, and now we're going to put in some phone number and address. So now I have that contact info entered in. I'm going to save the vendor record. And now I'm going to record that transaction with Hafra Cyber. So it's an expense transaction. So mouse over create, select expense. We have to indicate who we're paying, Hafra Cyber. How are we paying them? It says we are paying them with our checking account. So we select that. The payment date is the 24th of January. The payment method is with a check. And let's see. The amount was $599.50, and this is going to be charged to the office expense account, so 5,024 office expenses. And do we have a description? We do not, so we don't know exactly what we're purchasing. And if we had a bill or a PDF, of course, we'd attach it. But we don't, so we're going to save and close it. If we wanted to, we could look at the journal entry by hitting save and then more in the transaction journal. We can already anticipate what this is going to do though. Since our payment account was selected as our checking account, we know that we're going to be decreasing that. That's an asset, so that would be a credit to the balance of the checking account. And then down here for the category, we're indicating what did we pay for? Well, we paid for office expenses. So that would be a debit to office expenses, which is a increase to office expenses. So I'm just going to save and close. All right, our next transaction is with Bichat Supplies, and we are using our company debit card to make this purchase. So over the create button, I am going to go to the vendor column and I'm going to select check. And even though we're using the debit card, we're still using the check entry screen because it's going to be handled similarly. So who did we pay? It told us it was Bichat Supplies. This is our debit card, so it's going to go against our checking account. So we select that there. We can see that Bichat Supplies address auto-filled. The date is the 25th of January, and we're going to clear out the check number here. And since we're using our debit card, we're just going to type the word debit here. And what are we buying? Well, it tells us that we're purchasing some type of office expenses again. So 5,024 office expenses. We don't have details of what it is, so we're going to leave the description blank. The amount is $100 even. It's not billable to a specific customer, so we're not putting details there. If we had a receipt or anything like that, we would attach it, but we don't. And then we're going to save the transaction. Now if we save it, we can pull up the journal entry, but we can also sort of preview what that would be. Since we're on the check entry screen, the bank account here is going to be decreasing, so we're going to have a credit to the 1001 checking account, and then the category is going to be the other account, the offset, and that's going to be the expense account, indicating that we purchased some type of office expenses. And we could see that in the transaction journal. It's definitely important to always try to connect each of the transactions to what you already know from your principles accounting classes, because it's just going to help you retain it and understand it that much better. All right, so I'm going to save and close though and move on. All right, so our next transaction is going to involve the vendor named Evan Henry, and in an earlier chapter we set up a non-scheduled recurring transaction involving Evan Henry that will help us when we record transactions related to the vendor by auto-populating some of the details in there. So let's go there. So to do that, I'm going to mouse over my apps, go to expenses and bills, and then pull up vendors, and then I'm going to pull up Evan Henry here. And I'm first going to put his contact info in because we never did that originally. So now that we're on his vendor record, we're going to hit edit, and we're going to put in his phone number and his address. So now that I put his contact info, I'm going to save his vendor record, and now we're going to record this transaction. So since we've already set up a recurring transaction, we can use that template, and we can get there in several ways. One way to get there is if you click on the gear icon, and under lists you can select recurring transactions, and then you'll see it here and you'll be able to use it. Another way to get to it is if you mouse over my apps, go into the accounting group of apps, and you'll see recurring transactions there. It'll bring you to the same screen. You can also pull it up here in the search. If you typed in the word recurring, you should see that pull up, and it's just going to bring you to the same spot. So several ways to get to that same spot. So what we're going to do here is going to use this transaction. Now this is also why I didn't really like this example as a recurring transaction earlier, is because it auto-populates with an amount, and that amount isn't going to be a recurring thing. So that part of it I didn't appreciate, but I guess every time we're using this vendor, we are paying in the form of a check and we're using this expense, so it does save us those steps by having this template saved for us. But we're going to have to clear out this stuff for the amount and the calculation. Now the text says that the date of this payment is on the 30th, so make sure that we get that correct. And then we should just verify against the text. Are we still paying with the checking? Yeah, we are. And form of payment is check. Is it charged to the same account? It is. And it says it's based on his hourly rate of $40 per hour, so that didn't change. But this time it's 33 hours worth of work, and we're going to have to do the math. Now if I clear out the total that we had previously here, you can actually do calculations in this field here. If I just type in 40 and then times 33 and then click out of there, you see that it auto calculated that for me. And I'm just going to put it in my note there just so it's a little easier to read later. And if we had any attachments, we'd attach them, but we don't. This is not billable to a specific customer, but we could map this expense to Billa, but it doesn't tell us to do it. Now, I think it is directly traceable to Billa. It says in the text that the hours were specifically for them. So I personally would encourage the company to do that to get better reporting for each customer in each project, each pet. But the text doesn't ask us to do that, so I don't want it to mess up with any check figures or reports later on, so I'm not going to. But I sort of question the reason for why not there. And now I'm going to hit save, and now I have the more button. I can pull up the transaction journal if I want. And we've looked at a lot of those, though. We can see right away that the payment account is the checking account that's going to be credited to decrease that asset, and then what we're paying for is the expense here, so that's going to be debited to increase that expense. So I'm just going to save and close now. All right, we're getting down to the end of the list. It looks like the next transaction is a bill. So we are going to be receiving a bill from a new vendor named Andre LaFortune. So first thing we have to do is enter the vendor into the system, mouse over My Apps, go under Expenses and Bills, find your vendor center here, click on the button for New Vendor in the top right, put the vendor information in. So it's Andre LaFortune, and we've got his contact info. So now that I got that info entered, I'm going to save his vendor record, and then I'm going to record the transactions with Andre. So the first transaction is a bill transaction. So you're going to mouse over create, in the vendor column select bill and select Andre from the vendor list here. You can see that address that we put in auto populates, and let's see, the bill date is the 30th of January, and we don't have terms indicated, so we're just going to leave that blank, I guess. The category is going to be charged to the contractor's expense, and then we are going to put a description in here in a moment, and the description is going to be based on this calculation, and it tells us that we also pay Andre $40 per hour. So I'm going to put that in the notes here, $40 per hour, and then it says that he worked 17 hours for us for this bill. So we'll indicate that. We'll do the math over in the amount column. So type 40 star 17, then click outside of it, see that it calculated it. I'm going to put that amount in the note for clarity there. And then if we had a bill, I'd want to attach it, but we don't have a PDF or any document here, so we're not going to be able to. And then it does say that this service was specifically for a particular pet, so we could select Cal here, but the text doesn't indicate that we should. But once again, that is directly traceable to that project, so that would be more accurate reports. When we look at the reports in the project center, that would get this cost to that pet, but they don't indicate that we should do that, so I'm not going to. But once again, I question the wisdom of that. And now I'm going to save the transaction. And then just to review, we're entering a bill. So anytime you enter a bill, that's going to increase your accounts payable. So we go to more transaction journal. A bill is always going to increase your accounts payable. So accounts payable is a liability account. To increase a liability, you credit it, and that's what we see here, credit to accounts payable. And then the other account indicates, why do we owe more money? Well, it was an expense to us. We used his services. All right, so moving on. So now that we entered that bill, I anticipate that we're probably going to be paying it next. And that's exactly what we're doing. So mouse over create, we entered the bill, now we're paying that bill. You can't use pay bills until you've first recorded a bill. And once you've done that, then you'll have that bill showing up in this list. And how are we paying, Andre? Let's take a look. It says we are paying from our checking account. So make sure we select that as opposed to our credit card. Checking today. The payment date is the 31st of January. So find that date. It auto-populated with a check number there since we selected our checking account. We have the bill we're paying. We put the check mark there, and we're paying in full, so we leave this amount. If we're paying a different amount, we would enter it there, but we're not. And what are we going to do here? No notes or anything like that, so we're just going to save the transaction. And if we wanted to, we can close out of this screen, come up here to our search, wait a moment, and we'll see that bill payment that we just recorded to Andre. We can pull that up a minute. Now we can hit more and look at the transaction journal. Anytime we're on the bill payment screen, it's going to involve a decrease to your accounts payable. So we're going to see that in the journal entry. Accounts payable, once again, is a liability account. We know that we decrease liabilities on their debit side. So we see a debit to account payable. Yes, we do. And then the other account showing how we paid for it. In this case, we paid from our checking account. This is an asset, so it's decreasing that asset. All right, we got one more transaction. And this one is one that we haven't done before. We're going to be recording a payment towards our credit card balance. So to do that, I'm going to mouse over Create. In the other column, I'm going to select Pay Down Credit Card. For which credit card did we pay? Well, we only have one in the system, the Visa credit card. Select that. We don't have to indicate the payee. And let's see, what did we pay? We paid $1,600. And the date of the payment is January 31st. And which account did we use to make the payment? We're paying from our checking account. Looks like we electronically arranged the payment, so we're not going to check the box for I made a payment with a check, and we don't have any memos or attachments to enter per the book. So now I'm going to save the transaction, and now if I hit more, I can pull up the transaction journal. Since we're paying towards our credit card, when we look at the journal entry, we know that we're going to have a decrease to the liability to the credit card. And that's what we see here. The Visa credit card payable account is being debited. That's a decrease. And then the other account is showing how we paid for it. In this case, we paid from our checking. That's an asset. So a credit to an asset is a decrease. We have less balance in checking because we paid the credit card. All right, so that was the last transaction that we needed to record. Now, they wanted us to run a couple of reports. So the first one is going to be looking at a vendor list. So go to Reports, Standard Reports. And if you know the name of the report, you can just type it here. So it's a vendor contact list. And typed in the word vendor, see it right here. Going to populate. There they are. Some of them have addresses, some of them don't. And they ask us to export this as a Excel file. So to do that, you hit the share button up top, and then you can export in different formats on this one. If you want to do it to Excel, you can just hit that. It's going to download to your computer. And if you want to look at it, you're going to save the same information that we see right here. And it's off screen. There it is. Boom. Close that out. And then the other report that we're going to do is going to be that general ledger report that we've been doing almost every chapter. So most of reports, you could find it under standard reports, but if you watch my previous videos, we saved a custom report of this. So I'm just going to use that one. I see it here. I indicated all dates. And that is important once again because sometimes students make date errors and we do financial statements later. Those date errors can cause problems. So I want to make sure that the drop down menu says all dates and then run report if you didn't have this already saved in this way. And then basically scan through dates for all these transactions and just verify that they're all in January of 25. You don't have to go and match every date up right now, but just if you see anything that's outside of January 25, you know that there's a date error on that transaction. And then you can go back and find that one in the book and correct it. All right, so now what I want to do is compare all of these balances in this general ledger against my check figures. And I'm just going to scroll through and do that in a minute. So far, so good. The most likely accounts to have mistakes are going to be the ones with the most activities. So our checking account's going to be the most active account, and that's one's looking good. Everything so far is Yep, everything looks great. So make sure that your balances in Mookie match up with this general ledger. And if they don't, then you should be able to compare the detail within each account against the detail in your general ledger and find out why. All right, so now that we've done this work inside of Mookie the Beagle, you're going to do similar work inside of Hafra Cyber. Once again, to switch over to Hafra Cyber, click on the gear icon, click Switch Company, find Hafra Cyber, and once you're in, make sure that you see the company name up top. Always pay attention to which company you see up top here before you start entering transactions. Otherwise, you can create a little bit of a mess. If you've entered transactions into the wrong company file, you're going to have to remove those out of there. All right, if you need my help, if you have any questions at all, don't hesitate to ask. That's my job. I want to help you. I want you to feel comfortable reaching out.